Good morning, Kristen. How are you? Good morning, Kristen. Can you hear me? Let's see. Are you able to hear me?
I can hear you. Can you hear me?
Okay. Yep, I can hear you now.
Okay, good. Trying to troubleshoot it. I usually use Google Meet, so sometimes I not as quick on Zoom.
Yeah, I always have an issue with my AirPods going between my phone and my MacBook.
Yeah, I get it.
Well, awesome. Well, yeah, it's a pleasure having you on with us this morning.
Yeah, thanks. I'm excited.
Yeah, and I know we're going to have a few of my clients dial in and listen in to the conversation. I always like to tell people like bookkeeping was like the first thing that I hired out for before I hired my virtual assistant. Probably I was 2 years behind when I made that leap. I think after going through 1 year taxes being in complete disarray after flipping like four homes in one
hmm
year and the bookkeeping and everything and trying to go back retroactively and catch up and get things aligned for tax, it was a hot mess.
Yep. Yeah, you're not alone. That's pretty much how all my clients come over. And they're always like, "You've never seen a mess like this before." I'm like, "No, I have." Nobody's hiring a bookkeeper because it's clean.
Yep, yep. That is for sure. So we'll give people a few more minutes and we'll get going. And it's real informal. I know, did you put anything together? You want to just kind of keep a conversation? I don't know if you had any slides or anything to share.
No slides, but I am happy to share my screen and look at QuickBooks if that's something people are
Okay.
interested in.
Yeah, yeah. Do you want to kind of start walking through QuickBooks or do you want us to kind of converse a little bit up front?
Um, Either one. Sorry, I haven't done very many of these, so
Okay.
I'm happy to just, go with I could start with an intro. We could talk about maybe the benefits of bookkeeping. Um, and then I'm happy to share my screen and talk about QuickBooks.
Okay. Yeah, we can transition that way. Yeah, that'll work. And yeah, we may do some networking on the back end. And feel free to hang around. Just depending on how many people show up, we may break out in panels and discuss some things kind of after the fact.
Yeah, that sounds good. Happy with.
All right. Good morning, Mal, Rowena, William,
Good morning. Good morning, Johnny. Good morning,
Daryl. Good
Kristen.
morning.
Morning.
Good morning, everyone.
We have a few more people adding in, and we're going to get started. All righty. Well, welcome everyone to another $1 Million Coffee Hour. Hopefully, everyone has had a great week as we kind of come into this Wednesday. One of the things that I want to bring in someone to kind of talk about the importance of bookkeeping. I know it's one of those topics that isn't necessarily at the forefront of a lot of real estate investors' minds, especially as you're going in, you're approaching that first deal, the first property or even your second, third property, that a lot of times bookkeeping and accounting is the last thing that we're really thinking about. And so that's one of the reasons why I want to bring Kristen in. We connected on LinkedIn. And because my story with where I started after doing my first fix and flip and going to doing multiple properties, when it came around to tax season, after doing two or three properties, and you're going back retroactively, you're trying to look at the expenses, gather receipts, try to go remember what was this expense for, what was this charge for. And it is a lot, especially when you're in the next project into the next tax year and you're going back now trying to remember why you did what you did 6 months ago and going through that process. I think when you're, especially when you start talking about multifamily at a larger scale and everything that comes with the expenses and the bookkeeping, it becomes even more daunting to try to handle all of that by yourself. And really, as you're becoming a real estate investor and you're really approaching this, I encourage everyone to approach this as a business. I had a conversation last week uh, with someone in the community, just they were looking at self-managing. And we talked through the pros and cons and just the ability to operate at the strategic C-suite level on your business where you're making strategic decisions and not caught up in the day-to-day tactical tasks that have to happen in order for the property to be properly managed. And so one of those key tasks that you can outsource and really focus at the high level of building your portfolio and finding your next deal and managing as an asset manager and not as a day-to-day property manager and the bookkeeping side is your bookkeeper. And your bookkeeper is critical to your success. And so that's why I want to bring on Kristen today, kind of share her expertise and walk us through QuickBooks. QuickBooks is one of the tools that I've been using, I think, pretty much the entire time. I've kind of flip-flopped between some packages, but I've been with QuickBooks, I know, for at least the last 6, 7 years with all of our bookkeeping across multiple LLCs and just really having a process and approach that our bookkeepers can keep everything aligned. So whenever you're going to apply for a loan, that you can go straight into QuickBooks. You can download your profit and loss statement. They have standard reports you can go in and put together real quick. So when your banker says, "Hey, I want to see your P&L, your profit and loss statement for the LLC or for the property," you can go in and give them that information, and you can find just multiple different types of reports that you'll need just for when you get to your CPA when you're filing your taxes, as well as just like we said with the banker relationships or anything else where you'll need to provide your books or your information about the business. So with that, I'll call Kristen up and let her kind of introduce herself, and then we'll start and kind of have a open conversation that I know she has wants to kind of walk us through some of those features in QuickBooks that we can leverage.
Yeah, thank you. You really nailed it as far as why bookkeeping is so important. Those are a lot of the areas I'm always telling my clients about as well. But a little background on myself. So I'm Kristen Ambrose. I'm the owner of Ambrose Bookkeepers, and we're a small bookkeeping firm that works exclusively with real estate investors, mostly investors. We have some private lenders, we have some realtors as well, but all things real estate. And kind of how I got there is I studied accounting in college. I got my CPA license shortly after graduating. I sat for the exam right after college, and then I started working at PwC in the audit practice. I realized I didn't really love auditing. It's not like the side of accounting that's really fun. You walk into a room and people are not really happy to see you there. So I switched over. My next W-2 job was I worked at a financial consulting firm, CFGI, for a while. And basically what I did there is I was able to help basically startup companies implement their accounting process and make sure that they get all buttoned up before they go public. And I was mostly working in like the biotech and pharma space when I was there. And I really loved that job, but I started investing in real estate with my husband in 2020. We were home, we had some more time on our hands, and we always knew we wanted to kind of work for ourselves, own our time. So we just went down like a real estate investing rabbit hole, listening to all things Bigger Pockets and getting very excited that this could be, something that would enable us to eventually work for ourselves, own our own time. So we started out by buying a duplex in New Jersey. Funny enough, we actually had like a large single family home in the suburbs of New Jersey. We would both commute into New York City for our W-2 jobs. And we were looking at our house. We're like, why do we have this giant house that it's just the two of us? We don't need it. So we sold that house and we bought a duplex. And then we also bought 3 long-term rentals in Jacksonville, Florida. So that was kind of like what got us into real estate. Yeah. And from there we just like really fell in love with the real estate space. And I realized like talking to our investor friends that most people weren't doing their books. They would be scrambling at tax time and really missing out on all the benefits of having real-time reporting and really treating your portfolio like a business. So started Ambrose Bookkeepers 2.5 years ago with to help me achieve the goal of working for myself, owning my time, and then also really with the goal of providing real estate investors really high quality bookkeeping services. So right now we work with about 35 investors on a monthly basis. The team is myself. I have 2 full-time bookkeepers who one is an investor herself. The other one worked for an investor for 10 years. And actually my husband's able to join the business this year as well. So it's been really amazing.
Awesome. Well, that is quite the story. And that's the thing. I think being in the real estate space, that you love working with professionals that get real estate investing, that are investors themselves. And it goes a long way with understanding, because I've had, when I started off early on, I had tax preparers who weren't real estate investors. And I paid the price. And that forced me, it's like, hold on, why am I paying taxes? And digging in is like, okay, we didn't do this, we didn't do that. Did you think about this? And having conversations like, okay, I shouldn't be having to tell you your job
Teach you.
on how to
Yeah,
save me money. I'm like, something's wrong with this picture, and doing
exactly.
that. So what do you think was like the biggest, I would say, challenge that you faced kind of coming from corporate America, that side of accounting, and standing up and becoming your own entrepreneur and becoming starting to work with more real estate investors?
Yeah, there's been so much of a learning curve starting my own business. It's funny because with real estate, you start the entities, you're still wearing a lot of hats as an investor, but running like a bookkeeping firm, it was the first time I was hiring actual like W-2 employees, setting up payroll, be connected on LinkedIn, making sure like I have content to go out. It's like you really, but it's been very cool to kind of figure it out as I go. And it gives me such like I relate to my clients even more now, because a lot of my clients, they're much further along in their real estate investing journey than I am. This is their full-time gig. Some of them, I have clients that are, flipping almost 100 houses a year or something. So it's I can relate to them in the sense that like this is their full-time business. All the steps I'm doing to set up my bookkeeping business, they've already they've done. So it's like, especially when I'm reviewing their financials, it's I can relate even more so now to them.
Oh, that's awesome. So, like for new investors that are starting off, what are kind of those pitfalls or roadblocks or hurdles they should kind of start looking out for those that are looking to start off with acquire, maybe just say traditional rental properties, you can start from there, but then also those that are maybe looking to get into fix and flip.
Yeah. So I guess I would say to start out, I guess I want to maybe sell you a little bit on the benefits of bookkeeping, because I think that's, like you said, it's not the part of real estate investing that anybody really cares about in the beginning. They're like, okay, I'm just gonna get
Right.
started. But there's so many benefits to tracking your numbers right from the get-go. I guess like first, if you want to scale, like some people fall into real estate investing, some people, go in with intention. If you're going in with the intention of making it a business or knowing you want to acquire more properties, you are going to make mistakes the first couple investments. So having your bookkeeping done and your numbers ready to go will help you identify those mistakes more quickly and then be able to improve more quickly as well. So it really helps you scale. And as you said, on the tax side of things, so many people are scrambling at the end of tax year, which one is very stressful. Nobody enjoys that, but also you can't have proactive conversations with your tax CPA if you truly don't know how your business is doing. So that's feedback we get from our clients a lot too, is like, oh, I can talk to my tax CPA in like August rather than April when they actually have time to talk to you. They can maybe help you come up with some strategies that you can implement before the end of the year when it actually matters. So yeah, and then I know you touched on the lender piece. It's a lot of times when you're starting out, your lenders are going to want to see financial statements or, proof that you're worthy of lending to. So it's always helpful to have your numbers ready to go for that. So if the real estate market's competitive, you can be the first one with your offer ready. And yeah, also I think when you're starting out, people spend so much time analyzing deals. Everybody has like their spreadsheet to try to figure out if this is a good investment, and they spend so much time on their numbers then, and then they get the deal under contract and it's like, oh, we'll see how it does. I'll just like
Mm.
doing based on how much
Not anybody on this call. That does the people on this call, these investors, they don't do that.
Oh, good. No, a lot of people do come to me with they're like, I know I'm making money because I have money in my bank account, but I don't know like which properties are performing or where the money's going. So yeah, that's why bookkeeping is really important. But as far as like starting out, if you're, just getting your first property, QuickBooks may not be necessary for you at that point. I say really like probably after that 3 property mark is when you might want to start using QuickBooks, because it can be expensive, and we use the Plus subscription of QuickBooks Online so that you can set up both. There's a business field and a class field. We use the business for any different entities, the class field for different properties. But if you're just starting out, I think that you can really do it in Excel. I think it's a matter of taking your bank statements every month. You could pull those into Excel depending on what bank you have, and really categorizing each transaction so that you know what it's for, and that's something that's usually clean enough that you can bring to your tax CPA and you can work with them. Their tax CPAs are typically used to not having a lot to go from, so they're happy if you're writing everything down, because like you said, it's hard to remember if you're looking at something a year in the past. It's like, oh, which property was this for? What sometimes it's like Venmo things like that. It's like, oh, who did I send that to? Why did I send it?
Yes, no, 100%. I think that's a good point with QuickBooks, and starting off that it doesn't have to be complicated when you're
Mhm.
getting started. When you're doing your first property, you can look at just setting up a separate LLC checking account where
Mhm.
now just all the transactions for your business happen out of that one checking account. That is going to save you a lot of pain in the future, where now you can track those individual expenses, and now it's just a matter of going back and I think this question kind of going down that path. How often do you think we should be looking at balancing our books? Just with going through from transactions and making sure that we properly categorize them, or I guess what's the proper accounting term with I guess balancing the books.
Yeah, so we call it reconciling you're like reconciling
There you
your
go.
bank and credit card accounts. So you're making sure what's in your books, like the balance in your books matches what's in your bank and credit card account. That way, all the transactions were captured. And you made such a good point about separating, having a bank account specific for your business. I do see that a lot where people are using their personal account for business things. Definitely separate them. It makes bookkeeping easier. It's better from like a liability perspective. But where did we start with this?
Yeah, no, I think that was it with the reconciling.
Oh yeah,
Um,
the reconciling. Oh, monthly is the answer. You were saying how often?
so you
We
think monthly? Okay.
we do monthly. Some of my clients that have smaller portfolios, we do quarterly. It's
Mm.
they still have a W-2 job and it's not top of their priority list. I get that. But the more you're looking at it, the more you make it part of your routine, the more you understand how your business is doing, which will inform the decisions that you're making.
No, that's great. I think it'd be good to kind of show people around QuickBooks just
Yeah.
for those that may be, at the couple of property level or, graduating from Excel to kind of see what some of the examples of in the power of QuickBooks because it really makes it straightforward with producing reports and everything that you would be in Excel all day trying to build models to kind of
Yeah,
this level of detail.
definitely. And of course, in Excel, like your QuickBooks has a lot of like back end checks and things that it won't let you enter something incorrectly in the sense that like um, in accounting, there's always like a debit side and a credit side to a journal entry. QuickBooks doesn't let you not do that correctly, whereas in Excel, you might get a little bit off track. So yeah, this is, you can see my screen, right?
Yes, we can.
So this is just like an example QuickBooks subscription. I used this, I was setting up like some videos for my website. So I was like, oh, amazing. Like this can be useful for other things. So like I mentioned, there's a few different tiers of QuickBooks. We use the Plus subscription for all of our investors for that reason of we really need that class field to separate different properties. And there's a cap, I think, of 40 properties in the Plus subscription. So if we have clients with more, we use the advanced, which is unlimited. So really the way QuickBooks Online works, are you using QuickBooks Online or are you on desktop?
Online.
Okay. Sometimes you said you've been using it for 6 years. So sometimes when people go that far back, they are on desktop. But we use online. And I know that QuickBooks is trying to like transfer everybody over to online. So you connect your bank and credit card, your business bank and credit card accounts to QuickBooks, and it will pull in all of your transactions, which is really nice. So you can see that here in the bank feed. And basically what we do for our clients is we go in and categorize them. But if you were doing this yourself, you could go in and categorize, you put in the vendor. I think this one's a loan. You put in the vendor, you put in the account. Let's just say this is like interest only. That's in it, but a lot of times mortgages are principal interest escrow and you would split them. But let's just say this was interest only. And then you have options here to do like a project. So for some of our fix and flip investors, we do use the project module in QuickBooks. You have a business field, so you can choose your entity. I know a lot of real estate investors have a number of entities. So that's what's so nice about QuickBooks is it does allow you to do both entity and property, which a lot of the other, I think, bookkeeping solutions for investors fall short right now in that aspect. And then class we use for property. So yeah, your transactions come in, you can categorize them, kind of similar to how I was saying in Excel. And then, like you mentioned, the reporting. So there is a reconciliation feature in here. So basically what this saying is, okay, you every month should take your bank statement and in here you would say, okay, this is what the statement ending balance is. This is the date. And then let's just say it's 0. QuickBooks is going to say, okay, here's all the transactions that come through in that period. And you can check that what's in QuickBooks is what's in your bank. And that's how you know everything was captured. So we do that monthly. And then we also run a balance sheet and profit and loss statement for our clients every month. And that's I can show you what that looks like because this is really the benefit of QuickBooks is you can run the reports. There's lots of different reports. We provide balance sheet and P&L monthly, but sometimes like a client will need some sort of custom report and QuickBooks is really good about being able to slice the information how you need it. So any questions or thoughts before I
Yeah,
jump into
no,
the
I think it'll be worthwhile for especially for our multifamily folks who are really kind of when you start talking about profit or loss, and that's one of the things that we kind of walk through the P&L for like a apartment complex and
Mhm.
understanding when you're purchasing someone's apartment complex, being able to look at their P&L and understand how they're operating their business. Are the expenses
Mhm.
too high? Are they overpaying for trash? Are they overpaying for insurance? And you can look and see different ways where you can come in and bring efficiencies. And so being able to have this is great because we see it on the other side where we have a lot of investors where we're looking to buy their properties and their
Mhm.
books are a mess or
Mhm.
they don't have a P&L Or I was just looking at a P&L earlier this week on a multifamily in Birmingham, and the investor, I'm like, he paid insurance for like half the year, and then it just disappeared. There's nothing on the
Where is it?
T12.
Yeah.
Yeah, I'm like, where did it go?
Yeah.
And you start looking at different things. There was no capital expenditures. Half the year there was no maintenance or operational costs. It was, it just makes you scratch your head. I'm like, okay, this is a 50-year-old building. There
Hmm.
has to be some maintenance and maintenance and capex expended over these last 6 months. So things like that, it can tell you the health of the business, but a lot of times it's incomplete. Uh,
Hmm.
but from your perspective, what are some of the things that you have to work with your clients with to kind of rectify on their P&L or to help them
Hmm.
get their P&L where it's ready to be delivered to someone?
Right. So most of our clients come to us needing a cleanup. And what we do usually, it's usually easier to just start a new QuickBooks subscription for them than to rather than clean up what they have, because we really want to connect those bank accounts and make sure you're capturing everything. Like you said, like if you're missing half a year's worth of insurance, where is that insurance? It's if you're starting from scratch, connecting your bank accounts, you're probably going to find it. In other case, maybe it was maybe like it was escrowed by the lender or something. But um, as far as that's basically where we start with cleanups is starting a new QuickBooks. We categorize all the transactions. We reconcile your bank and credit card accounts, so we know, okay, everything's in there. And then we can actually look at the P&L statement. I'll open the P&L. And that's when those kind of things jump out at you. It's like, oh, I have this property, and um, so this is an example P&L. We have it just kind of set up like there's a long-term rental example, two long-term rentals, a short-term rental, and some flips. And we use kind of a different chart of accounts for the flip properties. And these are your standard kind of real estate chart of accounts. But like in that example, if you have a property like this one right here, and you're saying, oh, this is a long-term rental, why don't I see insurance? Or I know I'm paying a property manager, where's the property manager expense? Um,
Hmm.
those things, they really jump out at you when you finally have this visibility, which a lot of people, they don't have until they're in a software like QuickBooks.
No, that's great. I think it really highlights the need for like software and these different tools that once you come bring it into your business and you get to that level that it just makes your life that much easier, and it allows you to be able to have that view as a CEO, as a business owner
Mhm.
on what's moving the needle in regards to making strategic decisions on, the next property or changes you need to make in how you're operating, on where you can kind of set your business plan for the next year just based off how you executed this current year. And you have it
Yeah,
all right there in one place.
exactly. The best way to put together a forecast is using your historical data. And especially like a lot of times as investors, you have like the back of the napkin calculation. You're like, oh, this is how this property should be performing. Um, but having the actual data, you're like, oh, those, that repairs and maintenance did creep up, or um, like you gave the example of capital improvements. A lot of people will, if maybe put that on the P&L under repairs and maintenance instead of capitalizing it on their balance sheet, and then they miss out. Well, one, they're not necessarily compliant for taxes, but also they miss out on some of the depreciation benefits. So there's, doing your bookkeeping can be time consuming, or it's paying for QuickBooks can be an additional cost to the business, but the time savings and the insights you get certainly make it worthwhile.
Quick
For sure.
question. Good morning. I'm Shadi Patterson, and I just have a quick question. If you have multiple properties, do you need a separate bank account for each, or do you just need one business bank account and categorize each expense per property?
Yeah, so I have clients, most of my clients don't have a bank account per property. Um, Occasionally I'll have flippers who do, because they like to just use like one card for that flip project. But the nice thing about QuickBooks is it lets you put in the property in each transaction. So you can have multiple properties in one account and break them out.
Thank you.
Yeah, no
I,
problem.
I have a quick question to Kristen.
Mhm.
What Since you are in the expense tab right there, what counts as deductible expense for a rental property?
So we do use like the tax form to inform our chart of accounts, and I work with a number of tax CPAs that for my clients, like I'm always happy to meet with them, and that's kind of how we've structured our chart of accounts. So you can see um, we have kind of your typical like interest expense, property insurance, um, property manager, property taxes, repairs and maintenance, supplies. Supplies are more so for short-term rentals, utilities. These are kind of the basic ones that we see.
Okay. Follow-up question. So how do you categorize repairs versus improvements?
Yeah, so there's no hard and fast rule. I think it's about picking a threshold. Usually you can discuss that with your tax CPA. A lot of our clients use like $1,500 as the threshold, where if an expense is more than that and it's improving the useful life of your property, then it would go on your balance sheet under capital improvements. And then what I do is I run that capital improvements report for my clients, and they can send it to their tax CPA so that that all gets approved, and the tax CPA will then take that and calculate depreciation on it.
Gotcha.
And I also just like as a rule of thumb, ChatGPT can be really great to just be like, oh, is this something that should be capitalized in for a real estate investor? It's
Absolutely, absolutely.
come a
Thanks.
long way.
Yeah, yeah, for sure. I think Rowena raising her hands.
You're
Oh,
on
I think
mute,
you might be on mute.
Rowena.
Yep, we can't hear you, Rowena. There you
Hi,
go.
can you guys hear me?
Yes.
Yep.
Yep.
Okay, so I have, so I know your business is bookkeeping, but since you have a CPA background, do you sometimes feel obligated, or do you even educate um, your customers on the do's and don'ts, I mean, things that they can do to help them to save on taxes? I know you're not a tax strategist or anything, but is there any education that goes in for your customers? That's all.
So no, interestingly enough, like obviously I'm a CPA, but I always sat, like I never sat on the tax side of things. So it's just not my wheelhouse. And with real estate, there's so many benefits, like tax benefits to owning it. So you really want to be talking to someone who's an expert on it. And that's not me. I'm an expert on your bookkeeping. I'm an expert on getting your process set up so that this is manageable and something that's not overwhelming for you. But yeah, as far as taxes go, I work with a bunch of great tax CPAs that I refer my clients to, and I'm on calls with their tax CPAs regularly because it's like a small financial team for your business, and if we're all on the same page, it makes your life so much easier.
That's actually great. Thank you.
Yeah, no, that's a great question, Rowena. And I think that's where that delineation and having a team, like you said, that you're on a call with them a lot with your tax CPA, your bookkeeper, and you're constantly having those financial discussions on the next step. So that's one of the things I'm gonna have to get Larry, my CPA, to come on board and come in and share. And once again, Larry's an investor. He's in he's in the Hampton Roads area. I've been
Oh,
working with
okay.
Larry for over 5 years now on all my taxes for the apartments, the single family, my flip business as well too. So
Okay.
that yeah, we'll get him on and make the connection since you guys are in the Hampton Roads
Yes.
area together.
Yes, please. Okay.
For sure.
Thank you.
No, great questions. What anything that we didn't cover, Kristen, that you think would be really good for new investors starting out?
So I think we covered it. But yeah, I think it's just a matter of building the bookkeeping in as part of your routine, and doing it from the right at the beginning is the best way to do it, because like you mentioned, like you were 2 years in and you had a pretty big cleanup on your hands. That a lot of people end up in the same place. So if it's something you can prioritize at the beginning, the benefits are certainly there for both growing your portfolio and also um, being able to have those tax discussions.
No, most definitely. For those that were late on the call, I was sharing my story that, my bookkeeper was the first hire in my business, and I probably made it about 2 years later than I should have, just because you're going through, you're trying to acquire properties, you're getting deals done. The last thing you're thinking about is your bookkeeping, and when it comes to tax time at the end of the year, like you got to have your books together to give to your accountant, to your CPA, and or hopefully you're not trying to do them yourselves. Especially if you start doing more and more properties, it gets a little bit more complex, and you want to make sure that you're getting all the real estate tax savings that come with it. And so having your books together just makes it a lot more simplified and straightforward with getting your taxes prepared, and the conversations that you have with banks with being able to qualify for loans for properties, but also like for HELOCs and different things that's tied to the investment properties, that they want to see your books. They want to see your profit and loss statement for your LLC. And so this goes a long way into helping you have those things at a click of a button and really going forward with it. So this has been great. Anything I got now, real estate question, since you're a real estate investor. So for like you and your husband, you've kind of made that transition to Jacksonville. So what is the primary strategy for you guys, and what is the next acquisition that you guys are eyeing?
Yeah, so like I said, we both did make the leap from our corporate jobs, and now we're full-time Ambrose bookkeepers. So we haven't purchased a property in a little bit, but I think next for us is we're probably not going to keep moving in Jacksonville. The insurance rates are getting a little high for us. Also, we
Mm,
being out of state doable, but maybe not my preference anymore. Um,
okay.
so which I don't know. I would, if a good deal came across, I would do it again. We have an amazing property manager out there. I think, have the team narrowed down now, but that was a bit of a learning curve to get there. Um, but really, next one is I would love to house hack again. The duplex we're in now is our apartment's only 700 square feet, and we have a son now. He's 9 months, so we're
Ah,
ready.
congratulations.
Thank you. Yeah, we're ready for a bit of an upgrade. So I would love to get either like a bigger duplex, or maybe like a large single family with like a mother-in-law suite or something. I House hacking has just been like the best. Um, it's just been the best experience for us and the best investment. So, and especially because like we live in New Jersey, the appreciation on our property has been um, really, really great compared to like Florida, where our houses are a lot cheaper. So yeah, that's probably what we're thinking about next.
Okay. Well, no, awesome. Salute to you guys, because the house hacking piece that a lot of people forego it, and it has to be the right fit. I was talking to a nurse yesterday on a call that's moving to the Baltimore area, and he's getting stationed there, and we were talking about, I was like, hey, house hacking. He hasn't used his VA loan, and I was
Mhm.
like, hey, house hacking is an opportunity. You're single, and being able to use your VA loan, 100% financing, buy a property and rent out a few rooms, rent out the basement,
Mhm.
and you can almost eliminate your housing expense. That allows you
Right.
to put 30% of your income, additional 30% of your income that you can put into your investments, whether it's
Mhm.
going into your stock account or going into your next real estate property. That it makes a lot of sense if you have the lifestyle that can
Right.
support that. Couple, no kids, maybe one
Mhm.
kid now to do that. And the cool thing is, like with primary residences, we can go 2, 3, or 4 units
Right.
and not have to make a considerable down payment that we would if it was a pure investment property where you need to put 20 to
Right.
25% down. So salute to you all, and making a transition from corporate America. Like, I already know it's scary at times, but being a new business owner and going through that process, that you have to perfect being comfortable being uncomfortable. So
Mhm.
salute to you guys, and definitely, if I can be an asset or add value, by all means, let me know. Offered to hang around the community if there's anything like for it's like, let us know how we can work with you for like new investors that are looking to bring on bookkeeper. We'd love to be a source of referrals as well too. And yeah, and with that, what's the best way people can contact you? Oh, go ahead, Dr. Joel.
Yeah, along those same lines, can you talk about the expense of bookkeeping, how most of your customers are retaining you, and also if the bookkeeping services are a taxable expense against your passive income?
Mhm. Yeah, so definitely included as a taxable expense on your business financials. We price on a monthly basis. So right now we're not taking on like just cleanup work. We're taking on clients who need cleanup and then monthly bookkeeping. And the way we price is by your portfolio mix. So long-term rentals up to 4 units, we do $50 a month for monthly bookkeeping. We have two different flip packages. One is really granular, that's $200 a month. One is more high level, it's $100 a month. I have a pricing sheet I can send to Johnny as well. And then, short-term rentals are $100 a month as well. So we kind of just have like a calculator, we put in your portfolio and we figure it out that way. But right now our minimum monthly bookkeeping fee is $450 a month. Something I'm working on actually is like just a nice little course template for newbie investors like we talked about. It's just a question I get all the time. So I want to have a resource to be able to send people. So that's something I'm working on is a template for long-term rentals, a template for flips, a template for short-term rentals, and just like a nice little course on how to do your bookkeeping in those templates so that I can serve that niche. And then when people are ready, they can maybe come over and hire me on as their bookkeeper.
Now you said your minimum bookkeeping fee is $450 a month.
Yes.
So one needs to have several properties, I guess, that are cash flow intent before we consider hiring a bookkeeper.
Yeah, they a lot of the people I work with, it's kind of their full-time job right now. Like they've kind of made that leap from corporate America and this is their full-time business. So usually I say around 5 properties is when people will bring us on as a bookkeeper.
Yeah, I'll tell you for reference, and I'm overpaying clearly. The For my flip business, I pay $400 a month, and we've slowed down considerably. And then for each one of my 18 unit, and then for the 96 units, like each one of those is a separate entity, and we're paying I think 250 a piece for the multifamilies, which the property management company does a lot of the day to day hand holding in a separate operating account. And so I just really receive one lump sum deposit from the operation account, whatever's left over at the end of the month, they'll deposit to me. And then I'll take care of the mortgage and insurance. And so the transactions on like the apartment accounts isn't a lot. And so,
Yeah,
but
we
that's
see that
kind
a
of
lot.
so, but it
Yeah.
adds up.
Thank
Yeah,
you.
we see it a lot with clients with property managers, and we'll just basically take the property management statement and reflect that in QuickBooks and pick up all those other transactions, like you mentioned, that aren't captured by the property manager.
Would you guys be opposed to multifamily?
Taking on clients with multifamily,
Mhm.
I would say the largest we have right now is maybe a 10 or 15 unit client that we're
Okay.
serving. But no, it's certainly not something I'm opposed to. It's usually like that piece where it's like you have the property manager, what purpose, like I don't know. We haven't had too much interest. Like it seems that we have a lot of clients who come to us who do fix and flip. I think they see a lot of value in having their numbers real time so that they can take that to the next project and create the forecast.
Oh, cool.
Yeah, but
All
I'll
right.
chat. I'll
What's
drop
the
my email in the chat.
Yeah, that's what I was going to just the best way for people to reach out and yeah, no, this has been great. Value add. Any other questions?
I do. I have another one, Kristen. For security deposits
Mhm.
and like loan proceeds and repayments, like how would you categorize them?
Yeah, so security deposits, I think depending on what state you're in, you're either going to have like a separate bank account holding just the security deposit. So you'll have that as an asset in your bank account section on your balance sheet, and then the security deposit itself is going to be sitting as a liability in your liability section on your balance sheet because you technically owe that money back to the tenant. And then at the point where they move out, you would be decreasing that liability for whatever you pay them back. And then if you end up having to use some of that to pay for repairs, basically you would recognize that as like a repairs and maintenance expense. So that's the security deposit piece. And then on the liability I mentioned, or the loans, you really need to be breaking out the principal, interest, and escrow. So your interest is going to go under mortgage interest on your P&L. Your principal that you're paying towards your loan will reduce your liability on your balance sheet, and then your escrow is going to be sitting as an asset on your balance sheet. And basically what we do is we will true up that escrow balance at the end of the year, and we'll recognize like property tax or property insurance paid from escrow basically December 31st every year, because it can be a lot to track down your mortgage lender and say, oh, when did you pay my taxes? So we just do that at the end of the year, and that seems to work fine.
Gotcha. All right. So you'll create a category under liabilities. I missed the part. What the label would be on for the security deposits.
It would be security deposits. And that would be, a lot of our clients have a list of, okay, here's all the security deposits that I am currently holding. So,
Okay.
and, the tenants and the units that it goes with. And then that way, if they move out, what you owe them or what you need to deduct as far as repairs.
Awesome. Awesome. Go ahead,
Great
Shay.
questions. Sade, did you have a
I'm
question?
sorry, I coughed.
Oh,
You do not have a
no
question.
problem. Well, awesome. Well, no, this has been great. And we got here in the chat your email and contact information. So definitely feel free to reach out to Kristen. And if you have any questions or want to take her up on her services, and yeah, we look to have you back here in the future. And feel free to hang out. We're going to just talk real estate here for 20 minutes or so and just see what everyone has going on. And yeah, and talk investor talk.
Yeah,
But this
definitely.
has been great. Thank you so much.
Yeah, thanks so much for having me on. And yeah, feel free to send me any questions or things. I'm always happy to help. I really am just like a numbers and a real estate nerd, so happy to hang out.
We're gonna grab
Awesome.
Awesome.
we're gonna grab
Oh, go ahead,
Kristen's
Faye.
contact information and then post it inside our REI school community. I'll be sharing it with you guys. And for those that are not in yet in school, I'll post the link in the chat box so you guys can, join us inside there, and we'll hang around. If you guys have questions, anything.
Great.
Cool.
Can we just start with our questions? I don't know. How do
Yep.
you typically
Let's
do
go.
things, Johnny?
Yeah.
Hi, like I said, I'm Shadi Patterson. This is my first time on. I've been trying to catch up with Johnny for a minute, been following him for more than a year now. A little about my journey. Let's see. I still have a W-2 job. My husband passed away in 21, and I needed to do something different so that we can create a legacy. And we had a house that we used to live in that we just rented out when we moved away. And so I had an asset, really wasn't doing much for me other than just paying a mortgage. And I decided to I think it's called 1035, 1031. I don't know, I forget. Exchange.
Mhm.
Exchange the property, and I sold that house and bought three properties. So, but I'm just kind of learning along the way. So I feel like this is a good place for me to be because it can help my learning curve go a lot faster. If I would have known what I know now when I started out, I never would have bought any single families. I would only have bought, multifamily. So I have two single families and one duplex.
Okay.
And working with a property manager, all of that kind of stuff. I'm looking to grow from the four doors that I have now to 10 as fast as I can, and then ultimately to 20. So I'm wanting to know like things like, do you have a good calculator that you use to evaluate the deals really quickly? Um,
Hmm.
and then once you do, how do you find good deals, especially because the first time since I was doing the exchange, I was basically using my money. So they're all DSCR loans. Okay, I'm out of that, right? I don't have a lot of more capital to, put down payments and close loans, but I do see the value, and I know there's a marketplace out there and people trying to get out of their businesses. And so, how do I know that this 4 unit building or whatever is a good deal versus not a good deal. And like you said, Johnny, looking at some of the things to say, okay, it's okay right now, but I can make it better because I can be more efficient or I can do things better. And so that makes a good deal for me. So I live in Iowa. My properties are in Baltimore, Maryland. So I don't have a problem with, sort of being not local kind of thing.
Mhm.
So I'm just looking to leverage the community and kind of learn and grow. And, I like what Christian said. I am also a numbers person. I don't have accounting background, but some basic things I do understand. And so far, my property manager sort of gives me statements, but I do have another business account sort of outside of that where they'll ultimately need to reconcile. So, probably not at the point where I need to bring on an additional bookkeeper, but in case, it's a lot going on here. But I'm looking for a home where I can learn and grow and scale my business. That's where I am.
Oh, awesome. Thank you for that introduction. You're definitely in the right place, and where you are and where you're trying to go is the biggest part. And so I think really understanding your history, you gave a great rundown of that. I would say to make that leap to from 4 properties to 10 properties, that it's going to really narrow in on where do you want to invest. And I salute to you for being able to invest all the way across the country and being an out-of-state investor because it's not for the faint of heart. It comes with some challenges, but once you put the reps in up front and you build that team out, you have competent property management, you have reliable and trustworthy contractors on your team, and those are the two big pieces to
Johnny, I'm looking for a new
be,
market, and I heard you say Birmingham, which is one of the places that I'm looking. So I'm real happy to talk to you about that because I have a great team in Maryland. But like I said, when I
okay.
invested there, I had a lot of capital. So I was able to kind of find good deals, but it required down payment, closing costs kind of thing. I have some capital left, but just not as much as I had before. And Birmingham is I'm not going to say cheaper market, but you know,
It is. You can say it. You can
right.
say it.
Okay. But I'm a little not intimidated, that's the wrong word, a little hesitant just because, I don't have any resources in Birmingham. So
Right.
finding a new just a new team, basically. Finding a
Yeah.
new team is kind of intimidating a little bit. But I gotta do it. I got 2 kids in college and tuition's kicking my butt. So I gotta do it. I motivated and yeah.
No,
I had
awesome. Yeah, no, I'm definitely bullish on Alabama, and it's doable. It's really just leveraging investors, your relationships to build a team wherever you want to go, and being able to bring in and sustain the deal flow. And I say it all the time, like being able to set up those broker relationships are going to be key to finding those deals. But then also honing in on your niche, where when you're having a conversation with brokers or the owners that you need to talk to, because we talk about how to go direct to owner as well too, that you want to know what's your focus area, because a lot of times we go from single family to multifamily to different strategies with wholesaling to long-term rental, short-term rental, fix and flip, just being a private investor. So it's really getting that clarity on your approach and your strategy, and then narrowing it down to 1 or 2 markets that you really want to become intimately familiar with and focused on, where now when you see a deal, you can move quickly because you already you know what things are trading for in that market. You know what you're going to be looking at in regards to your expenses, and you know how you can add value to the property to force appreciation, where you're going to be able to increase the rents a certain amount, and you're not going to have to spend but X on your renovations. Now you know how you're going to make your money in the deal. Um, so I think once you get clarity on the location, then you can start putting your strategy together on how to bring in that next property. And and some of the strategies open themselves up more to creative financing, where you don't have to have all of your money up front. Especially when we start talking about tired landlords that own a lot of properties free and clear, that are looking to downgrade and maybe become the bank and not necessarily be a hands-on landlord and be active in their businesses. Those are great individuals that we partner with, both on the single family and multifamily side, to do deals as well as, you have the opportunity to work with brokers who have deals that with other investors that you can see off market before they even become listing. And a lot of times they never become listing because they shop them around to active investors that they have a relationship with, and they buy them and they go under contract and they never have to list the properties. So I think, once that strategy on where you want to invest in, and then you're already clear that you want to do multifamily, it's really going to be centered around building the broker relationships in the area, and then being able to go to direct to owner in the area as well too. Those are going to be your two primary lead sources to kind of get those multifamily properties.
Do you guys have expertise or can help with sort of building the offer, right? Like when you're a novice and you're looking to do some of these creative financing deals, you don't want to come off as a novice, right? Present something that doesn't
Yes.
make any sense, right? So you might run numbers and say, this, have something in mind that works for you, but having somebody with some more experience to say, this is what's attractive to the owner kind of thing, and to kind of help make sure, give you some confidence in what your offering is, something that would be well received, kind of thing.
Yeah, no, 100%. And and that's something that I kind of have in my inner circle when we break down and help you put those offers together real time, that you're presenting, because you want to have multiple prices. Like, hey, if you want, I can give you X amount price if you meet my terms. And
Yeah,
where, hey, you're going to hold back 15-20% that I don't have to go and find, which allows me to have more equity in the deal because I don't have to go and bring in more investors, more partners into this deal, but I can pay you a higher price for that. Versus, hey, if I have to go and put money together and bring people into the deal, I'm gonna have a lower cash offer price. And so you really want to look at the merit of the deal and the data that we can pull on the property when we do our reconnaissance and the recon that we're gonna do. We're gonna know, hey, do they own this free and clear? Do they have a loan that's maturing in less than 6 months? So we put the picture together on the owner, and then there we can put a craft an offer that would be competitive just based off the merits of the deal. Do they own 10 other properties in the area? Are they in their upper 70s, potentially, someone that's looking to get out of, being a landlord. And so now you can have different offers and you can have different value propositions with those offers that will speak to some of the situations that may be happening based off the age, or, they just had two evictions properties. They were in eviction court on these locations 6 months ago and they haven't come back up for rent. And so knowing those
gotcha.
type of things, that may be someone that they don't have the money to do the renovations and then just sell as is. And so for a lower price. And so things like that can allow you to put your offer together. Now you're in a better position to build rapport, but then also have an offer that speaks to their needs where you can kind of create a win-win.
Perfect. Thank you.
Shadi, do you
Oh,
have
great
like
question.
Shadi, I do have a question. Do you have a specific property that you're currently looking at right now?
I do, but so that's why I asked about the calculator because I'm not real sure how to evaluate, especially like multifamily, right? It's a duplex. One's a duplex, one's a quadplex, right? And other than some basic back of the envelope kind of things, I'm not really sure what things I need to pull in and consider, and then how do I know, one deal is better than the other deal, as far as like the price point. So definitely looking to learn how to evaluate options. Yes.
Gotcha. All right. Well, I'll share with you a link to book an alignment call so we can, take a look at that one and see how
Okay.
we can help you on that. Okay.
Okay.
All right. I put it in the chat.
Gotcha.
And in the meantime, I'll walk you through a calculator real quick and kind of show you what to look for. Where is it? Yeah, let's see if we trying to bring one that's simplified. I want to jump into the 40 unit something. Let's see here.
Ooh, yeah, I don't know if I'm ready for 40
Yeah.
units.
Yeah, I don't want to overwhelm you with kind of the underwriting for that, but I do want to give you, I think my 18 unit one in their calculator there, that'd be a good representation because it's the same approach for the
Mhm.
most part, and it'll give you an idea of the things that you need to look for on the P&L. Yep. Anybody else while I'm going through and pulling this up, any other wins for the week or any other introductions? I think we had a few new people on.
Well, I had a question.
Hi, Naya.
Hey, I know that I just had a call with you, and I was pending some things, but my question is, how is the community structure? Is it a website where I'm kind of self-navigating courses like on my own time, and then I reach out to y'all once I'm like um looking for something? Is it more of a community like a forum to like ask questions? Like how is it actually structured for the paid community, the 10K one that you have?
My inner circle. Yeah, no, great question. So it's geared towards weekly touch points with myself as well as Faye based off what your goals are. For instance, say, hey, this is your market. I need the top brokers in this area, as well as the avatar for the owner that we're going to target for his marketing. And so we're going to be coming together, me weekly on those action items to kind of start putting those offers in together. Once you start seeing the deal, like, hey, I found this one. Okay, I went and did what you said, and this is the offer that I want to put together. And so, kind of real time building that out, but then also having like the weekly group touch points as well too, to kind of help group learning, facilitate. Hey, other people are doing this. Hey, I just had this offer accepted. This is how this conversation went. Where you're learning from 10, 15 other people at the same time where you're focused in on implementing your strategy as well too. And kind of holding your hand as you're going through that process because I'm a believer that you learn more by doing versus going through. And so we have the academics and the videos that you're going through, but at the same time, you're going to be running and implementing your strategy directly in your market. And then there's all the other things with the financial planning roadmap, with building that piece out, as well as the estate planning, those different pieces that you can add on and have access to in regards to building out your whole plan. But for the real estate side of it specifically, that's kind of the cadence with the weekly touch points with myself. And then me and you kind of one on one as you're going through and implementing the strategy that we put together on getting your deal. And the goal is to, start making offers in the next 30 to 60 days, just based off your criteria, what you're looking to add to your portfolio.
Now, does that give me access, like lifetime access, or is it for a year, or how does that work with the one time big fee? How does
Mhm.
that? What's the structure for it?
Yeah, no, great question. So that's for the first year, and then after the year, it's $97 a month.
What if I have a different business model? Because right now I'm working on AI and it's not like real estate. Like I have an AI platform that I have for developers. I'm looking for developers. I also own four domains that I just recently acquired called AI for the government.com, AI for the IRS, and AI for the bank, and AI for paperwork. So I have like a really big AI master plan that I'm working on, and I'm trying to figure
Mhm.
out how I can get my first client, and I'm looking for developers.
Okay, I don't have any developers or any personally know any developers that would be able to help in that area. I think is that what you're asking?
Yeah, I'm just trying to find some people to work with this on because I need to do some trial and error for it.
I got you.
I thought we could
So
use that one for projects too, William.
Yeah, like for contractors as well.
Yep.
Yeah.
So what type of contractors? You're saying government contractors are like real estate renovation contractors.
Like renovation or like builders.
I
Okay.
think it's like the flip projects, fix and flips, or um, repairs and renovations estimate. Is that right?
Oh
I think I
yeah,
got cut off.
that's it.
Yeah. Yeah. So let's schedule you on another Wednesday, William, so we can get to see like the how the system works and how it can help the community too in terms of like the risk management.
Okay.
All right. Let me share my screen. Where Naya, did that answer your question?
Yes, sir.
Okay.
Johnny, can I just add a little bit more on Naya's
Sure.
question? All right. So yeah, I haven't explored yet the current platforms that we do have. This is a different classrooms we have inside school. So these are like different on-demand, learning that you can tap into. Although these are like foundational and some of them are like advanced courses, we focus on the personal one-on-one touch points and accountability calls with myself and Johnny. That way it's tailored to learning and taking action at the same time. Because, if you're just gonna sit and learn all of this, it's gonna be overwhelming. So that's why we give you like a clear path in terms of like this is the next step that we're gonna do this week. And the following week, we're gonna have another call and then, review what has been done. And then if there's anything specific that is like urgent to like say for example a deal review or whatever, or making an assessment of property or making an offer, or let's say if it's outside of that, such as for example creating your brand or marketing, um we also going to provide insights on that one specific to you.
Okay, and does it start like straight from scratch? Like if I was a person who like kind of like what we had talked about where I need to apply for the HELOC and I do need to like actually start an LLC to put all of these assets and different things under. Is there like guidance on that front, or is that something that I need to do kind of before I join the community?
Oh, that's a great question. Yeah, we're going to help you out on the next steps on that and then guide you on, okay, this is the um what would be optimal in terms of the next steps for you.
Okay.
Yeah, no, we're here to help you with all those steps in the journey, with all that. That's all part of it.
Yeah, because I think the purpose, at least for me, is to kind of streamline. I understand that I can take years to make mistakes, but the whole point of making the investment is to leverage the community and not make the mistakes so that I can kind of hit the ground running faster. So I didn't really know at what level I need to be in order to get the most value out of the community.
Mhm.
But I'm starting off very novice. Yes, I have like my own, oh yeah, I can YouTube and do XYZ, and I've done like little stuff, but not enough to like jump off the porch and say, um, and in my situation, I don't have the time to make the mistakes, if that makes sense. Um,
Yes.
so yeah, I just wanted to get more understanding on, okay, this initial investment, may be a large investment, but will I make that back in the first year? Or will I, gain some type of, like you said, not just sitting on it or not really getting the return on investment, you know, just trying to figure out the risk versus
Yeah.
reward of it.
No,
I
100%,
understand.
because I think that's the thing that you have to understand the value on your time and getting that information and being able to save $10,000 on an investment property, or to underwrite a deal where you save $50,000 on the offer price. Just because we're kind of what we're about to go through with the underwriting, because you know what to take into account when you're underwriting the expenses, to know, hey, well, I only can pay this amount because your net operating income for the property is X, and this is all I can pay. And it's not about me personal, it's because of the numbers and knowing that information. But you're 100% right, because overlooking a certain mistake and you close on a property and you didn't realize, that, you had horizontal cracks in the wall, which means that the foundation is shifted. And now you have a $25,000 foundation issue that you missed through the walkthrough that your contractor didn't tell you about. And so it's things like that where where I add value, and Faye as well. We're going through and kind of overlooking your shoulder and making sure that you're not making those mistakes when you're getting your contractor together, and understanding that, hey, you don't pay them more than 10 to 15% up front, or to make sure that you work with them on how you're going to do the draws to pay them and things like that, where you go through that process. You've never done that before and work with them before, you wouldn't know the right approach. And so, like you said, we're here to make you go faster, to accelerate your journey, to get deals done faster and more efficient, where you're not making those mistakes that can set you back.
Yep.
Perfect.
That is why we'll sit down with you in terms of like where are we right now, the finances and things like that. Because sometimes a deal that would be good for others may not be good for you. Depending on like the financial situation, things like that. That's why we have the creative financing, different, creative financing strategies that we can work on and play around these different resources that we can put together that would be specific for your situation. That's why there is the weekly touch points.
Yeah, but no, that's my goal, for you guys to take all my mistakes and not make those mistakes, and take my years of experience to go through. But it's hard. You can't put a dollar figure on being able to get, like, negotiate a 24 unit property and you get 100% owner finance, where you don't have to raise any money. You don't have to, give up any equity to bring on limited partners into the deal. And now you own this asset, until you get ready to sell it. And you have a $300 upside per unit in market rent that you can increase rents to increase the income. And so it's just be things like that you can't even, but knowing, if you don't know how to put a deal together and present an offer that way, you will miss out on that opportunity. So it's
So,
all good.
and
And so go ahead.
just one last question. So, what you see in all of your experience, as far as like real estate and transactions are happening every day, like, what's the outlook? Do you feel like, the opportunities to get into, especially in multifamily, right? And multiple and higher units, so higher than the 4 unit ones, small apartment buildings, not necessarily, huge commercial, any,
Mhm.
I think I understand that anything over 4 is considered commercial, but I guess what I'm saying is,
Right.
what's that outlook look like in general? Do you feel like there are lots of opportunities out there that people just don't know how to access it, or it's limited, and you got to really kind of, fight for the limited amount of deals that are out there? Just what are you seeing?
Good
No, great
question.
question. Yeah, great question, because the opportunity is there. And when we're talking about whether you're looking at single family or multifamily, you're looking for one deal. You're only looking for one deal. And when you get above 4 units and you're kind of in that five space, and I tell everyone, my niche is 5 to 40. That's where I like to play it. I don't have to worry about Wall Street. I don't have to worry about the large syndicators, the Grant Cardones of the world that's looking for 100 plus units, that want to have on-site property management. They're looking to raise millions of dollars, and so they're not looking at the small stuff. And so now the competition is less. There's still competition there, but I'm an abundance mindset. What's meant for me is meant for me, and you only need one deal. And now
Mhm.
the a level of profit, or money that you're able to make on one deal is exponential. It's exponentially increased on buying an 18 unit versus buying a single family home, a single family project. And so now, and you have more, I would argue, more creativity, just because a lot of those owners, they're more sophisticated investors. They get it. They know you have to make money in the deal. They understand an investment, and they're willing to, step forward and provide concessions, which is discount at closing, but they're also able to provide creative finance because they know what the banks are going to need in order to get the deal done. And a lot of these smaller apartment complexes, the landlords, they self-manage. They're all getting up in age. There's 10,000 people turning, at least this was a couple of years ago. 10,000 people are turning 65 years old every day in the United States. And the majority of the wealth that baby boomers own is in real estate. This has been their retirement plan for years and years, and a lot of them are getting to the point where, like, health reasons, lifestyle, they're unable to self-manage anymore. And a lot of them, they haven't kept up with routine maintenance, and they haven't kept up with their books properly. And therein lies the opportunity for us to come in and buy and force appreciation with these deals.
Got it.
And so that's the opportunity. And you only need one. My goal, I want to buy one apartment complex a year. That's all I need. Is that to add to what I'm doing and everything is, if I add one deal a year for the next 10 years, I'll be great, whether it's a 10 unit or it's a 30 unit, and putting those deals together, because I don't have to go and ask anybody else to sign on the loan. I can sign on all my loans. And the thing is that it just gives you so much more in regards to equity long term and building wealth. You can build wealth so much faster with multifamily, and you control your comparables. You're not looking to see what your neighbors sold their apartment for with the comps. They're looking at the net operating income. And so that's why, today we were talking about the profit and loss statement and the P&L, because that's where the profit is at. Knowing how you can offset expenses, reduce expenses, and seeing a property, knowing how you can increase income, whether it's increasing the rent, is charging for water and sewer costs per unit. In the way of rubs, it's able to charge for trash pickup if you're in the right location, and that's a service that your clients are interested in, or maybe adding washer and dryer units. So there's infinite opportunities to add income, but you have to do the analysis to get there and to make it happen. So I'm definitely bullish on multifamily. If you look at the last couple of years, across the board, the United States, construction has slowed down considerably. Things that started in 22 and 23 are starting to come to market now in certain areas, but like they hadn't built a new multifamily building in the last 3-4 years at least for Montgomery. And so there's not a lot of competition and inventory coming online, and more people are looking for places to rent because affordability is at an all-time low for people being able to buy single family residences. And so for those that own rentals, that you're going to do well if you're in a good area and the market rent, and you can go in and see where people haven't kept up with market rent. That's where our opportunity is going to be. And it's only going to get worse in 26 and 27 because, to build these big buildings, it takes at least 2 years to build them. And they're not starting right now. That permits, and you can see all this data because permits are at an all-time low. Well, not all-time low, but they're extremely low for where we were in 21 and 22 when it was a building frenzy because interest rates were so low. And so now we're going to have to suffer through this because rates have been so high for so long that builders have been on the sidelines. They're not building these properties. And so being able to get in certain areas where you're seeing that there's not a lot of inventory and there's still some jobs coming in, it's a stable market that you're going to be set up long term with some really good cash flow because inflation is going to be with us. And we all know real estate is the perfect hedge to inflation. Appreciation has ran up when we printed all this money after COVID, that we see appreciation, 35-40% in a lot of areas. That was kind of right in line with where inflation was, with these prices going up. So, long term, you want to own assets, you want to own, stocks, the equity side, but you want to own real assets like real estate. And with the leverage that we get with real estate, with only putting 10-20% down or no money down with creative financing, now we have all that leverage where, we're putting a small amount down, but we're getting all the appreciation is on the total value of the asset that we're buying, not just on our down payment on these deals. And so that leverage and being able to buy at the right price is how you're going to build wealth really fast with these multifamily units.
And the big beautiful bill, Johnny.
Yeah. Yeah. Oh, yeah. The big, beautiful bill. That was the icing on the cake with the 100% bonus depreciation that was made permanent. 2017, it came into effect, which that was the thing that kind of teed me off with me buying, my 5 apartment complexes that I have right now was just the offset with the taxes that you're able to get and get. My wife's a real estate professional. So you can take these passive losses and completely wipe out your active duty. Well, for me, I was active duty Air Force, so I could wipe out my W-2 income and not pay taxes on that money. And so that's the big thing. It's like, okay, you buy 18 unit, you put $200,000 down. In that same year, I had $186,000 loss in the eyes of the IRS because I was able to bring in the 5-year and 15-year property. I was able to depreciate those items all in the very first year. And so it's almost a one for one, reduction in your gross income that you can have from that. And then every year after that, you're wiping out 30%. So if that property is making 60,000 a year that you're going to write off until you wipe all that out, you're going to have a loss. But then each year after that first year where you have all that bonus depreciation the very first year, each year after that, our depreciation is about 30,000. And so if it's making 60,000 a year, you're only going to pay taxes on that 30,000 versus the 60 that you actually made with the depreciation. And so it's, the tax advantages with commercial real estate, but then also, of course, the long-term appreciation, the cash flow, because rents are going to keep going up 2 to 3% in line with inflation, and the lack of inventory, which means your occupancy is going to be higher. Right now, we're maxed out. I think we have 2 evictions coming up for our 96 units that we're completely leased in the building, and nobody's moving out as we're turning over leases and we're bringing them about 50% up to market rent, that nobody's leaving just because everywhere else is $1,000 in the good neighborhood to pay rent. And so that's the thing, that you just got to get in and start owning and buy those assets. But they're out there, and these next 5-10 years, as all these baby boomers get out the game, like there's going to be a lot of deals changing hands. And so like for me, I'm talking to these brokers in Alabama that's been in the game 10-20 years. They got all the relationships, and I'm making them my best friends. So when these deals are coming up, they're like, hey, let me call Johnny. Let me come to Johnny's community and talk to his investors because I know they're buying in Alabama. And so those relationships are going to be what moves the needle in the future here. Hopefully that answered that one for you, Sade.
Oh
I'm
yeah, I got a
extremely
ton of
bullish.
questions. I'm scheduling my call now.
Awesome. So on the underwriting piece, so this is kind of the underwriting workshop. So when we start talking about where to buy and the things that you need to really understand, is this a good deal? Should I be buying this? And what should my offer be? It's really a few things. We can't go through it all, but and I'll send this directly to you, but like the research market. So going through, and you can open this one up, but you go through and looking at can you guys see
Yep.
this? Where's it comment? Why is it asking me to make a copy? Okay, whatever. But you want to look at, hey, is the job growth? Is it positive? Is it negative? Are jobs coming to the area? Is the population growing? You want to know what the median household income is. We try to stay in a zip code where the median household income is at least $40,000. Statistically, as you get below $40,000 a month in income, that you start seeing a higher percentage of vacancy. Your vacancies go up in those areas. You have a lot more turnover, and crime is a little bit higher. So we try to stay above 40,000. It used to be 40,000 to maybe 70, 75,000, because back, a few years ago, anything over 75,000, people could afford to buy. And so once you get into those more affluent areas, zip codes, people would just buy a home instead of renting. But now that number has gone up, that in certain areas, if you're making $100,000, I know where here in Loudoun County, Virginia, if you're making $100,000 a year, you probably can't afford to buy in the area. And so you have to rent. And so just knowing that the median household income, you want to look at unemployment. That's a big one. Right now, the Federal Reserve, I think it's a 94% chance they're going to cut interest rates in September now, just because unemployment's starting to tick up and inflation is kind of staying tame. And so now they can start reducing the Federal Reserve rate. But you want to look at where unemployment is. That's a big driving indicator of the broader economy. But you want to look at the local area too and see, is there a lot of jobs here for people? Or why is there a high unemployment rate? Because guess what? If people aren't working, they can't pay their rent at the end of the day. So you want to look at the different cities, neighborhoods, the different sides of town, and kind of compare around the area. You want to look at the top 10 employers, make sure, hey, is this a military town? If 50% of the city works for the military base there, if the military base goes away, they're going to have a big problem. So you just want to know who's the top 10 employers and just see that diversity in employment. And that's one of the things, like, as well as I think one that's a wild card now is Section 8, where I think we're around 18%. I know one of the three people just moved in with Section 8, but when I last time I looked at it a couple of months ago, we were around 18% of our complex was Section 8. So right now, the government's rolling back Section 8. I just saw a video just talking about in Houston, they just completely wiped everybody off the Section 8 wait list in the city of Houston. And, and a lot of times people have been on those wait lists for years. And so they wiped all the wait lists off, and now they're going to be renewing applications kind of with the fine tooth comb on who's going to actually get those benefits. And people aren't going to necessarily be able to get those benefits long term. And so that's a risk area to watch. But you want to know where all the people are, where everybody's working. And so in making sure that you don't have any risk areas where if an employer leaves town, then now 20% of your people all don't have jobs all at one time. So things that you want to think about there and kind of have at the top. Market cap rates, you just want to understand when you're buying, going in, where are those cap rates at, and then where the reversion. Hey, you want to do a stress test. Okay, if cap rates expand and we're buying at an 8 cap, what it looks like at a 9 cap. Is it still a viable deal? And then you want to look at permit trends. That's one of the things we're looking at. When I look at permits for like Montgomery, I can see there hasn't been any new multifamily construction in Montgomery. And then especially on the east side of Montgomery where I'm at, it's like, hey, there haven't been building any new apartment complexes, which is great for me as a landlord. But then, and that goes into the delivery rate. Like, okay, for those that are under construction, when are they delivering? When are they coming online? When are they going to be leasing up? What's the absorption rate? How fast are these new buildings going to lease up? And because a lot of times when they're leasing up, you have to, especially in this market, if you look at Austin, Texas, that they're taking $200-300 off rent. You don't have to pay rent for 2-3 months. I saw that here in Alexandria, new buildings coming online right after COVID, where you had 3-4 months of free rent. They waived the parking fee, things like that to get people in the door to lease up their units. And so you start looking at what things that people are doing to absorb. And all that does is now you have, in order to keep people coming into your apartment, you have to reduce what you can charge for rent. And so that's why we care about new delivery coming online in our market and how fast they're being absorbed. Crime rate, I talked a little bit about that already, just the importance of the crime. There's different tools you can look and see in that zip code what's going on from a crime perspective. Then you want to look and see, hey, what are similar units? What are they getting for rent in their market? Like I know in my market, they're getting anywhere from $900 to $1,000 for 2 bedrooms, $800 to say $875 for 1 bedrooms. And so now, just how conservative do we want to be in charging in our market? And if you're buying a 10 unit and they're only charging $600 for the 2 bedrooms, and market rent is $900, that's $300 a rent increase. And so now we can look at like, okay, what do I have to do to these units in order to get $900? One of the things that I've found, with ours in Montgomery specifically, that we can get $200 of that market rent without doing anything, without investing $6,500 to turn the unit over and improve it to get $900. We can do nothing and still get $800. And that's worked out really well just because we don't have any new inventory coming online. There isn't a lot of competition, and we're on the right side of town where people want to live, and it works out really well. And
Johnny,
you
when
want
you
to look
say
at
do
just
nothing, when you say do nothing, are you doing turnover work like painting? I mean, minimum stuff, but
right, minimal
making it
stuff.
look
Yeah,
new and fresh.
yeah, that's it. That's it. Where you're
Okay,
spending, for turnover, we're talking $500-600 versus 10x in that, where, we're going to put in new vinyl plank flooring,
gotcha.
change out all the fixtures, things like that. So those are the things kind of going through, and we kind of break down all of those things, and looking at, hey, what are the things that your lender is going to be looking at with these pieces that you have to fill in the gaps to kind of understand. Okay, when I'm going for this loan, I can estimate really what my payment is going to be, and so in just talking with brokers. And I know we got a couple of DSCR lenders coming in, just like, hey, what are the parameters that they're looking for with some of their current loans and doing those things. Uh, so there is nuance on picking the market and going through, but those are some of the things to kind of consider when we're looking at, hey, should I invest here? Should I invest there? And when you start looking at the different rules of thumbs expenses and going through there as well, that this kind of helps you go through. You're like, hey, I'm looking at a 4 unit. Like, okay, what expenses should I add into my underwriting? And so this kind of goes through some things, kind of rules of thumb to kind of think about. With the multi-unit, it's nothing like getting an estimate. Like for your insurance, you're gonna have insurance, you're gonna have taxes, you're gonna have maintenance turnover that you're gonna have to project, you're gonna have your property management, those kind of expenses you want to estimate, as well as how are you setting up everything in regards to make ready. Do you know what kind of condition they are in, that you can go ahead and say, hey, I'm about to spend probably $5,000 when this person moves out in order to get market rent that I'm putting in my underwriting. And so kind of looking at those things and paying attention to that. This is kind of on a multifamily. Are you going to have payroll? Are you going to have marketing? We have a great road presence where we are off a quarter, so I don't pay for marketing. I don't do any external marketing just because we got a big sign on the side of the building. They can see it there in the middle of the complex. We put out signs in front when we have, units available, and we get a lot of foot traffic and a lot of people. We can track who's hitting our Google profile website, so we don't have to pay for advertising. Payroll, that's for something higher up. Usually payroll is wrapped up in just your management fee for monthly property management. And understand if you're paying for utilities, and if you are, then you can go in and look and say, hey, how much can I start charging for RUBS, and see what competitors are charging for their RUBS, which is simply just charge back to the units when they implement new leases to charge for water and sewer, or for power, just depending on how things are metered on the property. So these are some of the things that kind of go in that you put in your spreadsheet. You think through these expenses, your purchase price, and then how much you're going to have to pay for renovation, and it allows you to kind of put it all together in the spreadsheet to kind of underwrite it and come up with an offer price with that.
I
I
have
know
a weird
that's a
off
lot.
question.
Yeah,
To invest in your community, I'm just thinking, like, think about stuff. Is that a tax write-off for our LLC? Because I know you can write off like classes and courses, like
yeah,
me, far as like my nursing stuff.
Yes.
Like that
yeah.
would be a tax write-off too, right?
Yeah, no, 100%. Yeah, it's professional development.
Okay, I was thinking about it, and it was okay.
Mhm.
Yep. But
Yeah.
really, I think going through here, the rent roll, you just want to look at the current rents. When it's at a lesser scale for like 2 or 4 unit, but you just want to look at the current lease. You want to get a copy of the leases. You want to look and make sure that, see what they're charging. Anything weird in the lease that you want to kind of look and see, and then you want to see when are the leases ending, because hey, maybe you want to keep them. Maybe they're market rent. You want to keep them in place. Maybe are they already on a month to month where you just have to give them a 30-day notice, or 12 month that you have to wait a full 12 months, just depending on where they are in their lease, that you just want to kind of understand that going in. You want to look at the last year for like any of the rental properties or buying investment property. You want to look at the trailing 12 months. So look at their P&L, profit and loss statement that they had for the last 12 months on the expenses that they have. And it just gives you an idea of what's going on with the property, as well as, let's see, I'm gonna bring it up. I think I was only on my computer. I've been building an AI underwriting tool, where it's that I can just do it on my cell phone. I have to put it on my laptop. Uh, Here, I'll move it just to show you guys kind of how you get the P&L. And I'll just reset. Anyway, but yeah, that's some of the things that you look at with those. Let's see here. Any other questions? I know that's kind of real hot and heavy, just diving straight in. But for as like the going into the underwriting side of it, just what you should be kind of considering and taking a look at. Sade.
I got a call scheduled with you for Friday. My
Okay.
requested.
Uh, Ooh, do you have any time on Thursday? I thought Friday was booked because I have a client. We're going to a golf tournament here on
Okay,
Friday.
now I can look again. I guess I just requested that time, so you probably would have came back and said that doesn't work. Let me look for Thursday.
Okay.
Uh, how early you start? You're on Eastern time?
Yep, I'm on Eastern.
Can you do
I start as
uh,
early as 8.
8 o'clock your time? I could do 8 tomorrow.
Okay.
Or let's make it 8:30 your time,
Yeah, that's fine.
7:30 my time. Okay. And do I need to because they sent me like a link for that time slot on Friday. Can I just use that same link or do I need to sort of reschedule in a tool?
I'll just go
Re
ahead and make it Shadi. I'll do it on the back end, so you don't
You'll
have
do it.
to. Yep.
Okay, good. Okay. So I'm just gonna drag that same meeting invite to the 8:30 time slot for tomorrow. Okay.
Yep. Same link. I'll go ahead and update the time.
Thank you.
So real quick before we go, I was just going to bring up like this property that I'm looking at right now in Birmingham that broker sent me. And so when we were talking some of the questions I was asking about the P&L, because a lot of times, you'll see on the property certain things that you want to know that, hey, okay, what are they paying for cleaning, maintenance, insurance, uh, landscaping, so like for instance, their insurance that normally we pay about between 600, 650 a unit per year for insurance. And so this being an 18 unit, first thing that popped out was like, okay, they should be paying somewhere around probably 12, 13,000 a year. And it's an older property versus, and they're only paying 564. And this is 2023. They gave more than just 2 years. But then when I went down here, I kind of see where they started paying 757, 1,000. And I'm like, why is insurance jumping around like that? But that's just something. Well, excuse me, this is the insurance here. They started paying $900 a year. It's like, oh, okay, that's closer. But then it jumps back down to 564. I'm like, well, what happened there? But it just gives you a lot to kind of start asking questions. You write them down, you get them to the broker, or if you're working directly to the seller, we can ask the seller.
Mhm.
And but you're looking here at renovations. I'm like, okay, so 8 months, you guys did a total whopping $1,000 they put in the property, and I don't like this one because it didn't carry over. But it's the supplies are always negligible. So it's the line here. So here's renovations here for the most recent. So this is 2025. And so they've put in roughly three 15, 4,500. So they're roughly 7 grand this year. And so I got pictures yesterday from the broker. And so 3 units of the 18 haven't been updated. And with this, the exterior looks great. Definitely 9 day compared to what it looked like when I was driving on Google Earth and looking at it. And but you also want to look at it's like, okay, the big one is the net operating, how much rent income they're coming. And so you see here, they're not getting any a little bit of late fee, no convenience fee. So they're not getting like other income. So they're not charging for like rubs for like utilities. They're not charging for like trash. They're not charging for like coin laundry operation, anything like that. That would be other income coming into the company. So it's just really straight rent here. One of the big ones that I saw that they didn't have property management. So the guy he has like 300-400 units in the area and a property management company, but on his P&L here, they're not charging property management. And so when you look at total expenses, it's we'll go back to something more relevant to 2025 here. We look at total expenses, like for instance, this month, total expenses was 2,400 and rental income was 11,000. So if you divide, and this is a 19, I think 73 bill. So it's older, so expenses probably around 45 to 50% of the income normally. And so if you do that, that you just say, hey, 24, this is back of the envelope math, 2465 divided by 11,373, you'll see expenses are only 21% of uh of the income, which is like, okay, I'm waving a red flag. That's BS. That's not reality. And that's why you kind of look and you'll look across the entire T12 for like the last 12 months, because like depending on the invoices, they may not bill trash this month. Then you may have to pay like 3 months in trash and all in one month. Or sometimes the water bill isn't paid by the property management company, and then you may double up in one month versus the previous month. So that's why we kind of look at like by quarters or by over a 12-month period, because a lot of times you have fluctuation in when things are paid,
Mhm.
that's not necessarily paid within a 30-day window precisely each month. But I know here, this isn't an accurate P&L. 21% expenses ratio. So 10% we need to add in there for property management, as well as we know the insurance is probably at least probably about $500 below where it should be at. Nothing in there for maintenance expenses as well that we would easily add in there, 5-10%, probably 10% since it's an older building. And we're just going through it. So now I'm giving the broker all these questions like, hey, what about this, that they didn't have this in there? And like, what have they? I'm like, they've been on this building for 3 years and they hadn't put the 20,000 in it. I'm like, what have they really done? And then he's like, okay, well, we got to go pull capex because they didn't capture that in their P&L for the property on the renovations that they done. I'm like, okay, well, that's a red flag potentially. Let me look and see. And so whenever you're walking these buildings, you want to walk, if you're looking at a duplex or a 50 or 500 unit, you want to walk in every unit before you close on the property. So you know the condition of it and you know the status of everything. And so he texted me yesterday. Let's see here. He said roof and decking was replaced 21. I'm like, okay, 21. I'm like, well, this goes back to 23. So we wouldn't have saw that on the P&L. 90% of the units, HVAC water heaters were replaced in 21. So that wouldn't have been there. And only things 3 units of 18 have not been renovated. And yeah. And so that's the thing that I'll show you guys this, the picture. But and so now I was like, okay, that makes sense. Not a whole lot on the renovation side, but still there should be something. I know I'm going to be putting back 10%, 5 to 10% back for maintenance and things like that. And so when you're going and you're building out, they give you best guess for them right now and how they're operating, but you got to underwrite the deal when you buy it for how you're going to operate that deal. And this is the picture here that's sent over. So this is they did put a new pavement down, new parking lot. They updated the exterior within the last 4 years that they own. And when we start looking at market rent, that is 16 2 bedrooms and 2 1 bedrooms. You guys see that picture?
No, we still see the spreadsheet.
Oh, I'm sitting here talking like you guys can see the picture. Desktop view. There it is. Yep. So I can see, yes, okay, it's newer roofs. They've done some work. The exterior looks good. They did repave the parking lot. That looks good. And it's on a corner lot, kind of across from a fire department, because the area isn't the greatest area, but it's on the main road and the fire department is right across the street. And so it's kind of on a corner lot. So it's somewhat isolated. It's not like tucked off in a bad neighborhood area. And so I'm looking at that, and one of the big ones you want to look at is the windows as well too, and to see if they're recent windows. And I can't really tell if like they've been painted, because you can paint windows as well too. But they look like they're older windows just because you just normally don't buy windows like that at Home Depot and Lowe's. But that's something to consider. And so now I'm looking at market rent. If $900 a unit uh, is the number times, I'll do it on the computer so you guys can see what I'm doing here. If market rent is $900 times 16, and we got $800 for a 1 bedroom, so that's going to be add another $1,600. All right, so $16,000 of income is what potentially we could bring in. That would be our gross income. And we just kind of back of the envelope. We're not going to break out the individual insurance, taxes, property management, all that. We're going to just call it a straight up 50%. We got to pay 50% of that in expenses for this property. So now it's $8,000 is our net operating income. And so we're going to multiply that by 12. It's not in the best area of town. And so we're going to factor in, we're going to call it a 9% cap rate. So this is what the property would be, and we're going to divide that by, so $96,000, that's what it would produce after expenses, 50% expenses in 1 year. So we're going to divide that number by our cap rate, which is, we're going to say 0.09. So this property would be worth, was that 1,067,000?
Mm-hmm.
Yep. So, yep, 1,067,000 after bringing the units up to market rent. And so now I go back to the P&L. Oh, that's my P&L. Let's see, where did theirs go? I think here it. There it is. Here we go. So let's see here. And so we're going to look at apply that to where they are right now. So in June of 2025, they made 11,373. So we said best case we can make 16,000. We bring everything up to market rent. We know we got 3 units that need renovation. The other stuff will just need light turnover. So if they're only getting 11,373 and at a 9 cap, so we're going to divide. There we go. If they're getting 11,373, we're gonna multiply that times 12. So for a full year, we're gonna say that's the gross income per month for a full year is 136,000. And then now we're gonna do 50% expenses. Despite I don't care what they're saying they gave us. We're like, okay, no, we 50% expenses on what you're doing. So now you're bringing in 68,238, and now we're going to divide that by that same 9% cap rate for the area since it's not the best area. And we're going to see what we get. So it's telling me if I buy this at a 9 cap for that amount of income is generated today, because when we buy for today, what the property is producing today. We don't buy on future income. So we're buying the property on what it's producing today. And so at a 9% cap rate, buy it for 758. And if I improve the market rent by just increasing the rent to what the market is, because if they leave here, they're going to go pay market rent somewhere else. But and I'll increase the rents, now it would be worth that 1,067,000. And so just kind of quick envelope, that's 250 and 67. So by just knowing the market rent, increasing that, updating 3 units, you can add, what is that, $320,000 in value by doing those things. And so that's the thing that's how you force appreciation. Now imagine if you were doing a fix and flip. You have to go buy, how many houses would you have to flip? If you're making, we'll call it 30 to 40,000. If you're making 40,000 to flip, in order to make 350,000 in the capital, that's what
8.5,
eight.
9.
Yeah, that's it. Yeah, that's 8, 9 flips that you have to do. We're talking about doing one multifamily deal and one transaction, and so
A
and everything
question.
is. Go ahead.
That 758 do you compare that to what they're asking? So you did
Oh yeah,
your numbers. So what are they asking for it?
and
Like,
so he's asking the number originally he thought was going to be somewhere mid 50s, but he's asking 60, around 60. So we'll call it 60K.
60 a unit.
to,
Yeah, 60K per unit. Yes, times 18. So that's what he wants.
A million.
So he wants 1,008,000, 1,080,000. So he wants what it's worth once we bring it up to
After you
market
do all
rate.
this stuff. And so you're gonna
Exactly.
come back with a deal that says, hey, this is what I need to get. Well, not what you may not phrase it like that, but you're gonna come back in with like, I gotta put this in and do that, and this is what it's worth to me.
Yep, 100%. So my conversation with Bo later today is gonna be like, hey Bo, that because I still don't know. It's 50 years old. Who's updated the plumbing? Who's updated the electrical? I don't know if
Yeah.
that's been done yet. So that's a wild card. I know the roof's good, the HVAC's good. We can verify that, but they said a few years old. That's fine. But like the electrical plumbing with the older buildings, you got to be concerned about it. So that's a wild card. And that's where we're at. And so my conversation with Bo was like, hey, it's 60,000. It's not a deal. I got to be somewhere around 770 because the area is a 9 cap. He's only getting $11,300 a month income, based off that. And he's not paying property management. His insurance is a little bit lower. I know what I got to pay for insurance, and
Hmm.
the taxes are going to go up a little bit when we buy it. So I'm like, hey, I got to get it for around here based off the numbers. And so it's not personal and it's all numbers based. But a lot of times people don't know the process and how to put the numbers together, even though
Yeah.
this deal like, oh, I just got to buy something. And they don't really look at how is this a good investment. And so that's the thing that you have to do. And so it's just really, with the brokers, you always want to follow up. You want to let them know, hey, this is my offer price and this because and give them why. And nobody can really argue with like, hey, this is what I need and these are my estimates. And they can tell you like, well, I don't think they can disagree on certain things, but it's like, hey, these are the estimates that what I'm seeing in the marketplace. And they can kind of take that back. But the thing is, you may have somebody from California that's doing a 1031 exchange and they got $1 million
Yep.
that they got to spend in the next 30 days and they got to place it and buy an
Yep.
asset and they'll come in and buy it for that price just because they got to do something. And so those are the
Yep.
things that happen, but you got to make the best decision for you in the deal.
Now, where'd you
But
get
yeah,
that nine? Was that from the broker or that was from company or what, John?
just a nine
The
cap.
capital
I kind
approval.
of applied that just for what I know with the market to be conservative. Like East Montgomery, when we got our appraisal, the appraisal was like 6.75 cap rate, which I thought was like, I was expecting seven, maybe 7.5 on the cap rate, but that was very, very good. So I would say like a solid C neighborhood that I would be comfortable right now buying in a 9 cap rate. And and so that's kind of where I'm looking at that, just based off where the area is at. And he could say like, well, no, Johnny, it's an 8. This is an 8 cap all day. I'm like, I see it as a 9. It's completely subjective. It's like, well, it's a high crime area. I understand where you're seeing this is that, but I'm buying it as a 9. And so that's only you can. And then he may say, hey, this 10 unit down the street traded for this amount and it at an 8 cap, and then bring it in like, oh, okay, let me go relook at my numbers. I didn't have that information. So that's why
Right.
it's a conversation with the broker. They have more information. They can give you those type of things, comps and things that they sold. And the more the people that you work with that are doing this every day, they're gonna have all this other information that you don't know. And they be like, hey, I think you need to pay buy for 60 because Amazon's building a new warehouse right across the street. Publix and Starbucks, they just bought the vacant school across the street. They're tearing it down and putting out this whole new strip mall right there. And there's going to be a new brewery on the corner. Like, oh, okay.
Yeah.
I'll pay 60K because I want to own it long term. And I know all those things are going to increase the rent in the area with people wanting to live there because of that. And so that's why, having information, going to your city council meetings, understand because when you see somebody break ground, there were discussions about that business and that development 2 years ago at the city council meetings to get the permits, to get everything approved, to get the architectural plans approved. And so now you can start seeing strategically where new things are happening in the city, where they're trying to grow at, and then you can go out and buy your investments on the right side of town and be in that path of progress long term. But that was
Now,
all hypothetical that I just threw out there for this
if he
situation.
if he refused to come down on his asking price, but would seller finance this to you 100%, would you reconsider?
If he would give me 100% financing, hey, just take over it and as long if I'm able to get at least 10% cash, well, in that case, it wouldn't even be a 10% cash on return. But if I was still able to make at least, I would say 125, $150 per door after expenses and everything, then I would do it. Especially if I'm bullish, if I with the market that I know I can get those rents and increase the rents, and he would sell it to me at that.
Gotcha.
Yeah, because at that point, if I'm all in, we'll say 1,050,000, and I know once I implement the business plan, it'll be worth that conservatively at a 9% cap rate. If cap rates compress 1.5 points, I'm going to add in I'll be up 250, 300,000 in a year or two, as things, because commercial has dropped probably, I'd say probably maybe 15, 20% the last couple of years. And so with the inventory being absorbed, interest rates starting to come down, we're going to see prices and the cap rates expand because rents are going to continue going up, which is going to increase your NOI. Yeah, because I would tell you, you should be a real estate. If you think 10 years from now rent's going to be cheaper, then you probably should invest in real estate. But if you think rents are going up, as I do, that I don't see inflation and everything and rents getting cheaper with anything, with housing
Nothing getting
costs.
cheaper. Yeah, nothing's getting
So
cheaper.
yeah, that's why we're investing. But yeah, no, this is it's almost 10 o'clock.
Yeah.
I appreciate everybody for staying. I didn't realize we had put another hour in. But no, this is great. Great conversation. And that's kind of the process you kind of go through with evaluating these deals. Is completely subjective, but you got to know the right levers and the information to put in there and what's important to you. And that's why I tell you all to focus on one or two areas where you can make decisions fast. You know how things are happening. You know what market rents are, and the more you underwrite, the more and more you become comfortable with moving with speed. Whereas like, hey, we've got the data. He went by, took pictures, and now we can have a conversation like, hey, this is where I'm gonna be at ballpark based off it being a 9 cap and the income is generating today. And it's like, hey, take it, not necessarily take it or leave. It's like, hey, it is what it is. And it's like, okay. And then just, hey, move to the next deal.
Yeah. Because it has to be right for you
Yeah,
on
100%.
both sides. On
100%.
both sides.
Yeah, yeah,
They
it's got
want
to
the
be a
same
win-win.
thing. Yeah. Win-win.
In the market, they may have to go to market, put it out there, and then after 2 months, he'll reduce it 100K,
Yep.
reduce it again. Like, hey, come up maybe a little bit. Is he interested with seller financing? And then now you start having those conversations. If because with the time goes by, because he may want to have that money to start doing some new development here soon. You just don't know.
Hey, Johnny.
Hey, what's up, LaShawn?
Hey, doing well. Thank you. Good morning. I was in earlier and I had to drop off, but I did catch, was it Kristen's piece reference to bookkeeping? Very insightful. Thank you for sharing. Again, I plan on being a part of the community. I'm a licensed life insurance agent, also former military guy, just like Mr. Lynham right there. And Johnny, I just wanted to jump on real quick. I invited a buddy of mine that I served with that is also in the real estate in certain markets, as well as
Okay.
I guess other financial services to include life insurance. But his name is Francisco Mendez, and he's on the line right now. I just wanted to give a brief introduction, if at all possible. And again, I'm
Yeah,
looking
most
forward
definitely.
to joining and participating in more of these meetings myself personally, but I thought he would enjoy and also that it would be value added to the community. So I just wanted to make that introduction, if at all possible.
Yeah, go
Yep.
for it,
Yep.
Francisco.
I saw him earlier. He dropped
Oh, did he
off.
drop?
Oh, did he drop off? Okay.
Oh, you know what? Yeah,
Man,
I
we
guess
came and
it's his daughter's
gone.
birthday today, so he was kind of in and out. We were just in a meeting and looking at some things, and I said, hey, you should jump in to Johnny Lyman's weekly call. So he'll definitely be back, and I'll be back as well.
Let's go. No, I definitely
Hey,
appreciate
Johnny,
that. Yeah, it definitely
one
share this
last
with anybody.
question. Oops, go
No,
ahead.
go ahead.
Just one last question on using the military using their what do you call it?
The
The
VA
loan that you
loan.
guys have, the VA loan.
Mhm.
And they want to do that strategy where, they're living in one and they collecting rents on the other. And if that's not the long term where they want to live, right? They kind of get
Mhm.
in with a VA loan doing that. Can they sort of refi? How long is there a requirement they have to stay in the home for a certain amount of time before they refinance it with some other type thing to use it strictly as an investment?
Just a year.
No, great question. Yep. Yeah, somebody hit
Okay,
the nail on
just a
here. So
year.
just a
Thank
year.
you.
Yep. So it's just a year. And
Okay.
you can still keep it as a VA loan and keep it as a rental. Your entitlement is still tied up in the property. But hey, you can go and use a conventional mortgage or FHA as your next property, and you can leave your entitlement in that property, even though now it's a rental property for you. So you don't have to refinance it immediately.
I thought if you moved out of it though, that you after you got the loan, secured a VA, you was living in one side, renting out the other, and if you want to
Mhm.
move away from it, like you said, buy another home with conventional or something like that, it could stay as a VA if you rent both
Yeah.
sides. Okay.
Yep. Yep, it can. At one point, I had three VA loans active, and the other two were rental properties at that time because I had moved out in transition, and I actually my house that I live in, I used a jumbo VA loan, and I refinanced my most expensive mortgage to a conventional loan simultaneously while we were under contract buying this because I need to free up my entitlement to use my VA loan again, and
Mhm.
so. You can definitely do that and keep it while it's a rental property, or you can transition it to to a DSCR loan or
Mhm.
another loan model. As long as you got to have some equity in it. We're doing
Mhm.
that part of it. But
Mhm.
yeah, yeah, no,
Okay.
great question. Awesome. Let's
Uh,
go, everybody. This has been
let's
jam packed.
go.
What you got, Dr. Joe?
I don't have anything, but I enjoyed it, the session this morning, John.
Yeah, no, I did. We kind of went impromptu, but no, this was good. This was good. Kind of deep diving.
I appreciate you.
Awesome. Well, everybody have a great rest of the week. What we have coming up next week? So I know we have my brother Bruce is going to be coming. Not actual brother, but Bruce Waller is going to be coming the end of the month. He's going to be sharing about branding, strategic branding for entrepreneurs, for especially for us as real estate investors. So that's going to be really good in Dallas, well, in Fort Worth, we're going to have the Veterans and Real Estate Conference that's going to be happening September the 11th and 12th. I'll be speaking at that. And then in Alabama, North Alabama, they're going to have the Charm Real Estate Conference at Lake Gunnersville. That's going to be happening the following week. I think it's the 18th through the 20th in Alabama. Will be speaking at that one as well too in September. And we're going to have a webinar the 26th. I think it's Tuesday, August 26th, with one of my brothers is going to be coming in and talking about the stock investing and what he does with helping people on the financial advising side with investing in stocks. And so we're going to be doing a webinar that Tuesday evening, just talking about income professionals and why some of the challenges that they face with still being able to invest, and specifically investing in equities and on the stocks and bonds on the debt side too. So that's gonna be some of the things we got coming up. And anything else I missed, Faye? I think a couple of people already booked their alignment calls. Let's go. Let's get them in. Have some conversations on how to help you guys kind of maximize and accelerate those portfolios. Because the thing, like I tell people, I got to my $1 million net worth when I was 38 years old. And it's like knowing what I know now, it's like I could have got there a lot faster. And so that's my goal and vision with you is to amplify and accelerate your wealth building journey where it doesn't take you, for me, that was what, 15 years in my career from 23 to do that. It shouldn't take you that long to build wealth. Now we're getting the right information and having the right strategy and accountability to push you to get to where you need to be and where you want to be. I think is the key with everything that we're building. Because I'll tell you, I've been in $30,000 a year mastermind groups where they give you a Google Drive full of documents and you show up once a quarter. You talk with people for like 2 days. and you try to make some relationships, then you go back off to your business and to make it happen. And so everything that I build is kind of taking all the communities that I'm in, bringing those people back in that's really solid, that's good people that have like unique skill set and can share some things to help move and accelerate the process and give you guys everything that you need right here in the room to build wealth. And that's what it's all about with doing that. And yeah, and I think I'm still up there on InvestFest next weekend in Atlanta. I may make it down. I know we have a couple of people in the community that'll be at InvestFest. I got pulled into a due diligence trip to Atlanta the following Thursday and Friday for the financial advising side that we're having to meet with, I think it's Walton, the Walton Group, that they're doing like a $300 million real estate fund. And I have to go down and listen to the due diligence and what they're doing and the land. They're one of the largest landowners in the United States. And they work with like the Amazons and they buy land around like large areas like Atlanta and sell it off for like huge subdivision building and things like that, commercial projects for like the land. And so they're doing a big fund that we got to go get familiar with. So I'll be there, but we'll figure that out. InvestFest is coming up too. That's a good one. I've never been, but here's some good things. So a lot of moving pieces. See you guys next week. You know, how if you have any questions, you got deals you're underwriting, going through, definitely hop on the calendar and we'll have those conversations.
Yeah.
Good stuff.
So upcoming ones, we'll be scheduling out the AI session on risk mitigation and
that was the one I missed. Yes.
different loan services for different types of deals. So we'll pin the dates on that. So definitely good upcoming weeks for the $1 Million Coffee Chat. Appreciate everyone. Rubina, we'll schedule some catching up this week. So yeah.
Awesome. Have a great rest of the week, everybody.
Great. Okay.
All right.
Bye.
See you all
Bye-bye.
next week.